Thank you, Chairman. Chairman Powell, thanks for being here today. Appreciate it. I want to go back to something we had some brief discussions about this in the past, but in September of 2024, with core inflation still being above target and the labor market was holding steady at the time, the Fed made a decision to cut rates by a full 0.5 percentage point. It kind of raised some serious questions as to whether or not the data truly supported such a move at that time, and I think some of us were surprised that it was a full 0.5%. So can you revisit that again, what the Fed was thinking at that time? Because it seems to be somewhat of an enigma now. It stands out as, why was this done? Why was the 0.5% done at that point?
I'd be glad to. So first of all, actually the inflation and employment readings were very similar then to what they are now. They weren't terribly different, a tenth or two.
Right.
But the difference then was, you mentioned that the labor market was stable. It wasn't. The unemployment rate had actually gone up almost a full percentage point. I was very clear about this. We were very clear about it in real time too. The concern at that time was that there really hasn't been an experience, or hadn't been an experience in the modern era, in which the unemployment rate has gone up close to 1% that hasn't been followed by much higher levels of unemployment and a recession. So we were looking at that and saying, and remember, at the point we're talking about, the federal funds rate was 5.3%, so definitely a very restrictive level. We were the last of the big central banks to cut. So we wanted to make a statement that we were supportive of the labor market and not just inflation. We've been focusing on inflation. I was quite clear about this. So it was all about the labor market. Inflation was the same, and unemployment was roughly the same, but it was the rate of change with the unemployment rate that raised a lot of concerns. And remember, we were being criticized for being late to cut. So we could have done 25. If we'd done 25 in July, we were criticized for not cutting in July. Instead, we cut 50 in September, and it seemed like the right thing to do. And at the end of the day, we do what we think is the right thing when we think it's the right thing to do. We don't take into consideration political factors. If we start doing that, I don't know where that stops. Once you start considering elections and stuff like that, where does it stop? So
I didn't want to insinuate that it had anything to do with the election itself, but there just seems to be some very similar numbers right now. And I'm wondering, and I don't bring this up because I want to kind of make a point about did the Fed do the right thing or not. I bring it up because it seems like everything's in place right now to kind of do the same thing, make the same move. I know this morning already, you've talked a little bit about where you were on inflation right now and kind of what you're watching, but is there any lesson there? I mean, are we in a position where it would be appropriate to do something as big as a 0.5% cut again?
Well, look, as I said earlier, if you just look at the basic data and don't look at the forecast, you would say that we would have continued cutting. The difference, of course, is at this time, all forecasters are expecting pretty soon that some significant inflation will show up from tariffs. Now, and we can't just ignore that. But we're not. We're just saying let's wait and see more. That's all we're doing. And if you will have noticed, a substantial majority of the committee has written down rate cuts in the remaining 4 meetings this year. So it's just a question of being prudent and careful. But at a time when the labor market is still strong, we don't see weakness in the labor market. If we did, that would change things. We're going to continue to adapt as the data adapt. But that is the difference between then and now. Then, inflation was forecasted to continue to come down. Here, it's forecasted to go up by all forecasters. So, and again, we're not overreacting to that. We're just saying, hey, as long as the economy's strong, we can take a little bit of a pause here. And that's what we're doing. And again, continue to adapt as the data comes in. If we see data that suggests that inflation's not going to produce big increases, that would matter. And if we saw the labor market weakening, that would matter too. But we don't see those things.
What about supply chain? In 2020, that was a big issue, obviously related to COVID. But I know myself and other members, when we're in our districts and we're specifically talking to light manufacturing, there's concerns about the supply chain. Is that part of the data package that you review when you make a decision about where we're headed in the future?
Very much so. You know, I think that's one of the great, well, we won't call it a great thing, but
Gentleman's
one of the
time has
lessons to be taken from the last episode is supply chains really matter. We're watching that carefully. It's too soon to say really on that. We're not seeing it yet, but we could.
Gentleman's time has expired.
Thank you, Chairman. Yield back.